Peter, great to have you before Liberation Day.
Thank you,
How are
Glenn.
you?
Good. How are you?
Good. God, I mean, the whole world's changed since you and I talked 3 months ago or so. I feel like we're in a parallel universe now. Tell me what's top of mind for you. And I have some important questions to ask you regarding foreign markets because you were way ahead, even had to probably go through some pain by going into emerging markets and foreign markets um, before it became fashionable as the dollar decline accelerated. But with these tariffs, what are your expectations? No one knows what to do. Everyone's jockeying, or I'm kind of in favor of really almost being flat, the markets. What are your expectations for tomorrow and going forward?
Well, I think it's important to understand that tariffs are being used in or threatened in a multitude of ways. And with tomorrow, I'm not sure sort of which tariff door he picks.
I
Uh,
see. Okay.
one use we saw it with the threatened tariffs on Canada and Mexico for geopolitical, non-economic reasons, close up your borders.
Right.
We have one use of tariffs, which is trying to protect U.S. industries like steel and aluminum. Then another tariff use is to try to encourage domestic production. Another tariff use is reciprocity, of course, which I'm hoping the focus tomorrow is more on, that the net result could be a global reduction in tariffs in the aggregate. And then the fifth reason, which is what I fear the most, is they're just going to use it as a piggy bank in order to pay for the extension of the expiring tax cuts, and that the number bandied about of a 20% across the board tariff on goods imports, which is about 3 trillion-ish dollars, which would yield about $600 billion, because they think that's going to um, cut the budget deficit relative to GDP. That's the one that I think would potentially be most harmful. If there's one thing we learned over decades is you can have tax rates that are high, you can have tax rates that are low, but the government tends to collect about 17% of tax revenue as a percent of GDP. It's the spending side that is completely off sides, where historically it's call it 19 to 20% of GDP, and right now it's at about 24% of GDP, hence the near 7% budget deficit relative to GDP. So I don't know if tomorrow is a reciprocal day
Yeah.
or let's raise a bunch of money day, or a combination of both. Uh,
Okay.
that's the
Okay.
question, and no one knows.
Yeah, it's all uncertainty. So
Yeah, Trump.
let's talk about what I think might be a change of regime. I would say maybe about 5 months ago, people would have had a hard time imagining a weak dollar not being supportive of risk. And you and I talked about it when the dollar was peaking, that money, dollars could be repatriated, that there were other markets that were more attractive, that weren't as overvalued as the US. Have we now entered a new regime where a weak dollar is now risk off?
Well, the weak dollar is a reflection or sort of a symptom of foreign risk off in U.S. assets.
Right.
The game-changing event this year was the DeepSeek news. And just to back up for
Okay.
a second, US Mag 7 stocks basically became a reserve holdings for foreigners and
The
some foreign
Chinese
central bank.
mainly? The
No,
Chinese? No,
no, no,
just
no.
that. Okay.
Okay, so foreigners owned US treasuries, they own US assets, they own some US stocks, but Mag 7 became a major component of that reserve basket. If you look at as of December 31st, the investment arm of the Norwegian Central Bank
Okay.
was the 10th largest shareholder of NVIDIA. They owned 324 million shares of Nvidia. The Swiss National Bank, as of December 31st, owned 90 million shares of Nvidia. And they own Microsoft, and they own Apple, and they own Amazon, and they own Meta, and they own Tesla, et cetera,
They
et
own
cetera.
them all.
So, and it wasn't just those two central banks, it was central banks around the world and also other foreign holders to the point where if you include preferred stocks, closed-end funds, mutual funds, stocks, foreigners own about $17 trillion of US equities. So when DeepSeek news came out, it sort of sealed the fate of this Mag 7 trade that was already on shaky legs because investors started to question the viability and the return potential of all this AI spend.
Right.
So what we've seen is as foreigners have cut back their holdings of Mag 7 stocks, the dollar has weakened too. You can draw a correlation chart of the
Yeah, an
Mag 7
overlay.
index and the US dollar index, and they
Right.
pretty much mimic each other both up and down over the past year. So the dollar
Okay.
weakness is an outgrowth of foreigners that are trimming back on US assets, and some of that money is finding a home in gold.
Okay. Well, I mean, where else, Peter? I mean, that's the obvious. Okay,
Well,
so they're not.
international markets as well. I mean, look at the
Okay.
German DAX, look at the
Yeah,
Hang
the
Seng,
deck.
look at
Yeah,
other markets.
China. Yeah,
Yeah. So
yeah. So do you think
investors
this
are
is a
finding other things to
secular?
buy.
Is this secular shift? I was reading that what's happening now, the shift from, the overweight, U.S. Tech stocks for years and the undervaluation of foreign markets, that this only happens every maybe 20 years. So, it's not late. It's really just beginning. Do you feel that way?
Yeah, this is a multi-year thing.
Okay.
There are also some other broader things that I think sort of add to this transition period that we're very much early in entering. When you look at the U.S. economy, the three major economic reasons for growth over the last couple of years has been excessive government spending and anything related to that, whether it's Medicare, Medicaid payments, defense, whether it's the IRA, whether it's the CHIPS Act, whether it's transfer payments. A 7% budget deficit to GDP is extremely stimulative. Also, anything related to AI spend and anything related to upper income spending, where upper income households have benefited from rising stock prices and
Yeah.
higher home prices. Well, if the administration's goal, which I laud, is to cut the pace of government spending increases and rein in our excessive debts and deficits, that or in long term is a great thing, but in the short term, that's going to
Painful.
be hugely negative economically.
Yeah.
If the pace of AI spend, which is still very robust, starts to slow down in its rate of increase, which I think we're seeing signs of that sequentially in the last earnings reports from the big companies, and we'll see it again in a few weeks. Well, that's going to be obviously a big drag on CapEx because CapEx ex AI has been flatlining. And if this stock market continues to have shaky legs, you can be sure that upper income spending is not going to be able to maintain the same level of momentum. So there's some really big things going on here in terms of, as I use the word again, transition phases that I think everyone should be paying some very big attention to.
Okay. Uh, so I wanted to ask you about this. So, because we've had Mag 7 and NASDAQ sell off and more recession talk, and this would be a kind of a counter argument, the industrials held up great through this period. So, and it doesn't look like it would take much for the industrials to make new highs. So if we do have a recovery, and I call what the S&Ps did yesterday, Peter, a graveyard save. Do you know what that is, a graveyard save? You ever play pinball?
I have.
All right. So it's when the ball is going down into the middle of the hole and you almost simultaneously flip your flippers, but there's a little time difference between it, and you
It's true.
save that ball from going down the hole,
Yeah,
and
I've
you
done
get
that.
to keep playing. Huh? You've done that?
Yeah,
All
I
right. All right.
I'm
So,
a Gen Xer. I played
all
pinball.
right. All right. Graveyard save. So that's what I think the S&Ps were. These technically are real critical levels. So, are we going to hold 5,500 and get a rally first because of maybe yields coming down? Could it support the market for a little while, or are yields only going to come down because they fear, it's a flight to quality and they fear a breakdown? Can they both rally together here now? TLT looks pretty good. Looks like it has some legs. What's your view on yields and the market here?
Big picture, long term, I'm bearish on yields. I think we're in a bond
Okay.
bear market with continuous rises, increases in long term rates. In the short
Okay.
term, yeah, obviously yields around the world are rallying, or I should say, are dropping. Bonds are rallying,
Look at
particularly
that
the last
10-year.
couple of days on recession worries. Um,
So
but
we could have a growth scare in April or May
Yeah, I mean, I think
because of what they're
we're in the
doing.
midst of it for
Yeah.
reasons I just stated, and then you throw in tariffs. But with tariffs and its impact on manufacturing, manufacturing's been in a recession for 2 years now. So it's
Yeah.
not like tariffs would put manufacturing into recession.
Is that why
It's
XLI
already
is
in a
holding up
recession.
so well?
Well, I mean, what's our experience when it comes to stocks? When you're buying stocks in a recession is a great time to buy. Buying stocks when things are great is usually a bad time to buy.
Right.
So
Right.
the industrial stocks, well, pre-tariffs have been sniffing out sort of the end of this manufacturing recession around the world. I mean,
Okay.
the PMIs around the world are trying to stabilize here around 50. This was pre-tariff. So there was a hope that, a 2 year recession was enough and it's time to buy these things. I think that's why, they've hung in as well as they have.
Yeah. Or they're going to get killed here. Looks like one way or the other here. So the dollar, Peter, still bearish dollar. Could we see like 112 euro before we see 105 again?
Well, in the face of all this tariff talk, where theoretically the dollar should be rallying against all currencies,
Okay.
really particularly we've been rallying against the Mexican peso and the Canadian dollar because that's where we know there's some specific tariffs. The Chinese yuan, where China now has 20% tariffs on top of them, on top of the tariffs that were put on in 2018, the yuan has sort of been
Yeah.
little changed here. So Um, that's what's most interesting here. And let's just say, we slap tariffs on the euro. The euro's been rallying because of hopes that fiscal spending in Europe, particularly in Germany, are going to jumpstart economies there. And also getting to our discussion earlier about foreign flows finding a home outside the US. That's one of the problems here with tariffs. If the dollar doesn't rally across the board, if we throw in blanket tariffs across the world and the dollar doesn't rally, that means that the U.S. consumer is going to and the U.S. manufacturer is going to eat most of these tariffs. We need the dollar to rally in a way to mitigate the tariffs that this
Right.
we're going to do. So,
But that's not what the administration wants. They
well,
still
the
want a weak dollar
administration,
on
well,
top
maybe
of it.
over time they do, but that's the inherent conflict with some of these policies.
Okay. All right. So I know you have a very important meeting to make, Peter. So here we are, beginning of the second quarter. Uh, where do you think the opportunities are, quick, and the major risk? Do you think that we're going to break down in the market and trade back down, I don't know, S&P 5,000 to 4,900, something like that?
I
Or
mean, I
or
think, I'm sorry, go ahead.
no, go ahead, because I've never this would be the first top where you've had the greedometer in fear mode for over 3 months. So it's not like there was any euphoria at the top. So are just sentiment wise, are people too bearish right now?
I have no idea where market's going to go in the next couple of weeks, in the next couple of months.
Okay.
I
All
do
right.
know that if the S&P 500 is going to lose the leadership of 35% of the index of the mag being the Mag 7,
Yeah.
the risks are clearly to the downside because I
Okay.
don't know what group is going to take the baton and somehow save the day. Yeah, we'll
There
get
isn't there isn't anything look, they led the way up. They're going to lead the way down.
exactly. So that's the risk to the market is we're losing its leadership. And that's the broader
Sponsorship.
risk. Yes.
Yeah.
Are there opportunities in other parts of the market? Yes, for sure. But speaking of the S&P, if you lose 35% of the index, the risks are clearly to the downside.
All right, Peter. Really appreciate it. Hope you and your subscribers and all the people that listen to you, they're smart that they listen to you, and appreciate you coming here every 3 months and sharing your view. I think we got a lot more input from you doing these than you can do on like a quick TV interview. So thank you. And I encourage people to not only follow Peter, but to go to his website and check out his Substack and keep in touch and get the at least get the free email so that you're aware. He gives a great review of the highlights of the day. Then at the end of the week, a succinct wrap up of all those things. So if you're not reading Peter Boockvar, you're missing out. That's my view, buddy.
Thank you, Dale. Appreciate it.
All
Thanks for
right,
having me
bud.
on.
All right,
Okay,
I'll
take care.
see you next quarter, bro.
Sounds good. Thanks.
All right, that's a wrap, everyone. Have a great rest of the day. Get some sleep, and you know, I'm not afraid of no tariffs. Are you? I'm not afraid. Who's afraid? Anyone? I don't know. Why be afraid? Okay. Anyway, we shouldn't be. Don't just count your tariffs, count your blessings. See you guys tomorrow. Adios. Thank you, everyone. Get into the community. You 200 left in here. Now where are you going to go? Should be going into the chat room. Open your credit card, and if you haven't tried it, send a buck. I'll guarantee that buck. I'll send you a refund. Huh? All right, Donna, take it easy. All right, Donna's afraid. All right. Well, you know what? If you're worried and you can't sleep, just count your blessings instead of sheep, and you'll fall asleep counting your blessings. All right. Everyone more relaxed now? Uh, yeah. Don't forget to pick up my CD, The Trading Minstrel. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.